My name is Felix Shipkovich, and I'd like to welcome everyone, all the new and returning attendees, to Payment Week's second and continuing series of 4 webinars focusing on Bitcoin and digital currency regulation. Every Tuesday this month, we'll be delving into some critical issues that digital currency businesses, users, and regulators are facing today. First, I'd like to thank this week's sponsor, Cftc, which develops enterprise-level compliance software and has made waves with embracing digital currency compliance as part of its offerings. In our first webinar last Tuesday, we had a distinguished panel with Professor Uman Shadab, Carolyn Cleave of Manav Phelps, and BitPay's Chief Compliance Officer, Tim Byung, who discussed the current regulatory environment of digital currencies and the implications of guidances issued by the Internal Revenue Service, New York Division of Financial Services, as well as other U.S. regulatory bodies. Last week, we focused on which government bodies had the sway over Bitcoin businesses and how the state of New York's BitLicense proposal would affect Bitcoin companies, the safety, legality of the main entry for prospective Bitcoiners, which today are many digital currency exchanges. Today, in a new development, we have breaking news. As most of you heard yesterday, the CFPB issued a warning to consumers regarding digital currencies. CFPB Director Richard Corday said that virtual currencies are an unregulated Wild West. And he was concerned that the end consumers, the end users of Bitcoin, are not protected well in the marketplace. You can read more about the story on paymentweek.com. Today, we'll further this discussion by focusing on the intersection of digital currencies, regulation, and Wall Street. There are purportedly hundreds of millions of Wall Street dollars set to enter the digital currency space. VCs and investment firms are already funding disruptive digital currency-based startup businesses, and it's only a matter of time before the old guard pushes their way in. As Bitcoin is becoming increasingly mainstream, it's received attention of financial institutions looking at Bitcoin protocol as a currency, a derivative, a commodity, a new asset class, and a potential driver of foreign exchange. In this webinar, we'll discuss some of these issues that the institutions on Wall Street are facing today. We'll talk about the innovation of Bitcoin and digital currencies and how they evolve on Wall Street. We'll touch once again upon the New York's BitLicense proposal, how the regulators are watching out, protecting investors and the end users of digital currency, as referenced yesterday by CFPB. We'll discuss where the money flows in digital currencies, and we'll touch upon the subject whether we are going to see a first IPO in the Bitcoin space. Now I'd like to introduce our distinguished speakers. With us today, we have Barry Silbert. Barry is the founder and chairman of Second Market, an online marketplace for buying and selling of illiquid assets, creator of Bitcoin Investment Trust, and an investor of some of the most successful digital currency startups. Barry is a serial entrepreneur who has been listed in the Forbes 40 under 40 and the leader in the digital currency revolution. Next, we have John Becker. John is the General Counsel and Chief Compliance Officer at Circle Internet Financial. Prior to joining Circle, John was a Senior VP and a Deputy General Counsel and BSA Officer at Boston Private Financial Holdings. He's an expert on banking regulation, anti-money laundering, and corporate law issues. And finally, we have Shekhar Wan, VP of Digital Assets Management at Cftc. Shekhar had previously ran TD Securities' global operations team for client onboarding, email, security, data management, and settlement instructions. Prior, Shekhar was a management consultant with Deloitte Consulting and served as the CEO of Mango, a financial services company headquartered in the Commonwealth of Bahamas. So that's the subject of discussion for today's webinar. And I'd like to add that the participants leave their questions until the end of the presentation, until the end of all the questions, and I'll take those in about 45 minutes or so. So let's start. The first question is to the entire panel. And the question is, let's go back to the very basic of Bitcoin. as Wall Street is embracing, adopting to the innovations of Bitcoin and the crypto products and services, is Wall Street ready to embrace this innovation? How do the Wall Street cops, right? Some of these cops, we see the CFPB, we have the New York Division of Financial Services, and even sometimes the CFTC and the SEC chiming in. How do these Wall Street cops view this innovation? So let me open it up to the panel.
This is Barry speaking. I guess the way that I would describe their reaction has been, I think, the way that most people react to Bitcoin and digital currency. Initially, high level of skepticism, confusion, and then ultimately that transitions into interest and then kind of a knowledge gathering exercise. And really, in my experience, and this is both at the federal and state level, after the regulators and policymakers dig in, the conclusion they all have come to is that, number one, digital currency is not going away. Bitcoin may or may not be the winner, but digital currency is not going away. And it presents some very interesting opportunities and certainly some risks to both consumers and investors. And some agencies have put out guidance, some have said we're not going to touch it. But I've been quite pleased to see the reaction in my conversations with the regulators and policymakers.
Yeah, this is John Betchen. I agree with Barry. I mean, I think, in meeting a lot with regulators and also talking to people about the benefits of Bitcoin, there's a lot of excitement out there. But as we've seen, a lot of the regulations at this point and guidance really focus on the risks. And you mentioned the CFPB's recent guidance. And I think, obviously consumer and investor protection is important, and we'll need some of that. We'll need regulation to allow this marketplace to mature. However, I think there's still a lot of education needs to be done, both at the investor level, the consumer level, and the regulatory lawmaker level, to truly give the full picture of what the technology does. I think, if you look through either the CFPB guidance, the New York Bit License proposal and whatnot, there's still a bit of a misunderstanding of how the technology works or the real impact of the regulation. So I think it's a matter of finding that right balance. But I think it's really surprising to me how engaged all these agencies have been and how willing they do see that there is an opportunity here to make some real changes and some real changes to both the payments and in the investment space. So I think it's going to be interesting to see how things play out over the next 6 to 12 months, because we're really in a critical phase for the evolution of this marketplace.
This is Shaker from Strivas. Totally agree with Barry and John in terms of their perspective on the regulators. The other side of the equation is the actual traditional institutional investors, so the banking side. Having come out of the industry, there's a great deal of interest as digital currencies represents a whole new class of assets or products that are just coming to the forefront and just being defined. So I see quite a bit of interest even from the traditional market in terms of they know what it is, that they don't understand it all maybe perhaps completely, but they do know what Bitcoin is as sort of a single currency, but the digital currency space as a potential opportunity. And kind of the conversations we've been having with the industry, there seems to be a desire for additional sort of the clarity and the transparency that they want in order to be able to get into it. And I think the conversations with the regulators are looking at trying to assess those risks and kind of build capabilities around that. The opinion is split in terms of how overarching or far-reaching the proposed regs are going to be, but nonetheless, I think that the traditional market is interested, and they're keeping an eye on it and see how it evolves, and so that it can drive their engagement in the process.
And the one thing I would add is Bitcoin is truly a global phenomenon, and as the regulators and policymakers here in the U.S. Kind of look at investor protection and consumer protection, they're also very cognizant of the fact that there are countries around the world that are actually taking a fairly supportive, accommodative, and in some case kind of a very welcoming approach to Bitcoin companies, because ultimately if Bitcoin really is going to be as transformative to the financial system as we think it's going to be, it would be a real risk to kind of U.S. financial the New York financial capital of the world standing if these businesses kind of move to to Europe or to China. And so in my conversations with these decision makers and these policymakers, they're really trying to take kind of a balanced, thoughtful approach and make sure that we keep this innovation or foster this innovation here in the U.S.
Yeah, I would just add to that. I think this is a really evolving space, and things are, whether we think so or not, things are moving pretty quickly. And I've been at this about a year now, and just we've had an uphill climb with some of the issues that have happened in the marketplace, with some of the security issues in Mt. Gox and some of the AML issues and bad actors on Silk Road and the like. And I think we've overcome that. I think we have a more mature marketplace now, and I think you're seeing where Wall Street is seeing a real opportunity. You're seeing analyst coverage, you're seeing new investment vehicles, new products and services, and certainly exchanges coming to the forefront. And I think once we get over the hump here, as far as some of the uncertainty regarding regulations, regarding getting more banks and business partners together into this space, I think you'll see even more maturity and really Wall Street coming, not only dipping a toe, but jumping into the waters here.
Let me throw another question to the panel. I sort of want to take the conversation about the regulatory environment and some of the issues, such as potentially are some of the regulators overreaching their jurisdiction? They're being a little too aggressive. What is the panel's reaction to the CFPB statement that was made yesterday? Do you think that statement was overreaching? Do you think perhaps maybe the regulators should start having a positive impact on the Bitcoin regulatory environment? I understand that they're warning the public that the customer is not yet fully protected, but what's the overall reaction from the panel to what was said yesterday?
This is John. My initial reaction is certainly consumer protection is important. It's important for people to understand the risks. We are dealing with financial services and financial products, and certainly both from a consumer protection standpoint and any kind of investor protection, investment vehicles here, there needs to be full disclosure, just any other commodity or security or anything like that. I think, though, listing the risks don't give the entire picture, and again, listing the risks out of context is a little difficult too. So I think there's a lot of consumer education that needs to happen, and frankly, the industry needs to do that too as well, to also show the benefits, because along with these risks, there's a lot of benefits when it comes to privacy, when it comes to costs, when it comes to the use of digital currency. So I think we've had a lot of guidance now, that really focus on the risk side, and it's important. But I think you need to have a level, measured approach here to really be effective, and to not just kind of strike the fear and uncertainty nerve chord with the consumer. So for this to certainly develop, I think again it's a educational process. It's educational for the consumers and the regulators as well, and that's something that we as industry need to do a good job at.
What amuses me with some of these notices is most of the risks can be applied to physical cash, and some of these notices, they kind of conflate kind of investing in Bitcoin versus using Bitcoin, and like John said, I mean, it's absolutely appropriate to highlight the risks of investing in Bitcoin for investors. And from a consumer perspective, I certainly would have been happier to kind of see a more balanced kind of notice about kind of both the benefits and the risks. But again, the risks, things about theft, it can absolutely be applied to fiat physical currency as well.
Yeah, and so my contribution to that comment is that I think, given how new Bitcoin has been around for a few years now, but the mainstream impact of it going mainstream in the last 12 to 24 months, it's been kind of causing a lot more attention. And I think you will continue to see, and you can call it a knee-jerk reaction, or you're going to see a lot of opinions and a lot of thoughts, because this is a sort of an evolving market, an evolving product class. So as it grows, you'll see, both sides, proponents and those who highlight the risks associated with it. And and it's true, there are risks associated with it, both for consumers and businesses. We're still learning about it, the business use cases and where we can apply it and how we can actually build different products on it. But these things, like any new product, you'll have to work through them, right? Systematically. There's a lot of companies like Second Market and Circle that are doing great work in terms of building and educating the marketplace around this asset class. So I think we'll continue to learn and grow, but you will get those kind of comments and direction, going forward. So we just have to manage it.
Yeah, it's John again. And I think that, the Wild West comment is an easy soundbite, and it's something, that resonates at some level. But I think that's just kind of indicative of what the perception is out there. Again, this is an early industry, and I think, some of the initial perception has been that the earlier adopters in this community were a bit of libertarians or anarchists, or really didn't have the best interests in mind. And I think, we're starting to see that kind of thaw and fade away, and we're getting a lot more serious players in this space, a lot more venture capital money, a lot more serious, well-run organizations with people who have backgrounds in both technology, financial services, and the more and more that happens, I think, it will kind of change the debate a little bit. But I think there is still a little bit of that perception issue that needs to be overcome, as well as I think that just kind of, is all part of this overall education, and need to understand what the real issues are here.
So as the industry is trying to overcome their earlier perception, my next question is to Barry. I'd like to get your thoughts, Barry, in regards to the New York Division of Financial Services, its license proposal. How is this proposal in the current form going to affect, if it's going to affect Second Market? Is it going to affect your client base? How is Second Market digesting what was proposed very recently by the state of New York?
Well, I'll start off by saying that having been involved in legislation and regulation, primarily at the federal level, the process that the DFS is through is actually quite normal. And frankly, the fact that they put it out for comment is good, because there's sometimes regulations and laws put forward that don't have a whole lot of public comments. And in my conversations with the DFS, I've been really happy to see the kind of the balanced, thoughtful approach they're taking, and the team really is trying to do the right thing here, not stifle innovation, create kind of the guardrails, as they oftentimes say, and they recognize that, as I mentioned before, Bitcoin is global, and there's now other states within the U.S. that are looking to compete to kind of bring the companies and the innovation and the jobs locally. So the DFS, I mean, they have the work cut out for them, because it is likely that other states and maybe other countries will kind of follow. And so I think ultimately, the rules that were proposed, as is typically the case, they're kind of as broad and, let's say, as aggressive as possible. And through a few rounds of comments and dialogue with the community, I do expect that they will be pared back in some places, eliminated in some places. And ultimately, I'm cautiously optimistic it'll be workable for Bitcoin companies here in New York, and not just ones that are well funded like mine, but also kind of the one person working off of their couch like I once was with my company. As it affects what I'm doing here, our efforts are primarily around the Bitcoin Investment Trust product, which is an investment product which is regulated by the SEC. It's around Bitcoin trading, which again is a broker-dealer activity regulated by FINRA and the SEC, and then our efforts to build an exchange. And so, we have the capital, we have the resources to deal with it in its current form and anything that it ultimately becomes. And what we're really doing is we're trying to fight for the startup that has not yet gotten the funding and doesn't have the access to resources that we have.
Yes, John, I agree with
Thank you,
Barry. Sorry, this is John. I agree with Barry as far as from a Circle perspective. We're a different business model. We're dealing with a kind of a consumer finance wallet type service, and the New York proposal would have impact in its current form. But I think it's a very collaborative process. They've reached out. We have a comment period. It's easy to have that knee-jerk reaction is saying that in some areas it's excessive or it needs to be pared back. And I think once we go through the comment process, that will indeed happen, and we'll get that balanced regulation that's perhaps needed. But I agree, we need to not discourage startups and smaller firms and not overregulate to the point where the compliance costs and the burdens are too much there. We need to also have regulation which is really principles based, and the industry needs to be held accountable. Over prescriptive regulations would be difficult. I think there are a couple, we don't need to really get in the details of the proposal, but there are areas such as the anti-money laundering provisions, which really impacts pretty much everybody, no matter what your business model is. And some of the things in the proposal are really just technically difficult to comply with just because of the nature of Bitcoin. And so some of those things, it goes back to just understanding what the real impact of the regulations as written are, and I think that's why we have this comment period, and hopefully we'll be able to do a good job as far as working collaboratively with the DFS to get to a point which is ultimately good, because I think at the end of the day, as Barry said, they want to encourage folks to come to New York. New York is always obviously an important state from a financial services perspective. We've heard already some anecdotes of companies saying, well, if this is the rule, then we're going to just put a ring fence around New York and not do business there. And I don't think anybody wants that that's in this space. And so we will hopefully get to the right result as we work through this process.
This is Shaker.
Thank you.
So we've kind of gone through the proposals, and I agree with Barry and John in terms of it's not uncommon to take out these rules and kind of go through the comment period. Some of the proposed rules are pretty complex around liquidity assessments and collateralization of assets and things like that needs to be clarified. At the same time, some of this rules like AML and compliance, basic compliance to those things is critical, because it needs to bring in some transparency and some controls so that some of the other larger players can get into the market and hopefully grow this, right? So I mean, the total market cap is around $7-8 billion, which was the GDP of the Bahamas when I was there. So it's relatively small market, and you kind of need a bit of structure. So if you're going to get some of the adoption, the larger scale adoption that we're looking for to support it, and I think that some regs, are helpful. Obviously, finding the right balance is critical, is the critical piece. But we do need some structure around it to make sure that the adoption occurs.
Thank you, panelists. Let's move on to an interesting subject, something that Barry touched upon really quickly in his comment. But I'm going to start with asking this question to John. Most ready for Bitcoin exchanges. They're a fairly new phenomenon. It's been around for a few years. How are these exchanges going to operate, their functionality, and really their impact on the cryptocurrency marketplace? Do you think there's going to be an impact on the cryptocurrency business with the rise of digital currency exchanges?
Yeah, absolutely. I think, this is probably one of the most critical parts of the Bitcoin ecosystem. We have several different players and several different business models when it comes to Bitcoin. You have services like us and Coinbase that deal with consumers and wallet services. Services like a BitPay that deals with merchant processing. I think those are pretty, you have some good, real good players out there in the marketplace. But I think the exchanges really impacts no matter everyone here, no matter what you see the utility value of Bitcoin, whether you see it as a payment mechanism or as an investment vehicle. And there's a couple of reasons for that. First of all, as I already mentioned, there's really no liquidity in the marketplace right now. So for businesses like Circle to be able to process transactions, or for institutional investors to get into this space and wanted to make investments, there needs to be more liquidity. And the other side of the coin is the volatility. We're still seeing a lot of price fluctuations. I think that's going to temper a bit over time as we get more players in the market, more institutional investors. But I think we really need a lot more kind of certainty in the marketplace. We need a level playing field as well. And I think that's obviously why there's going to be a need for regulation here eventually, similar to any other type of exchange, to ensure that everyone's operating on a level playing field. And that regulation can also be in the form of self-regulatory organization as well. That's something that's been bantered about, and whether what that would look like and how that would play out is something that remains to be seen. But I think you're starting to see institutional investors take a real look at this. You're seeing some new exciting products in the marketplace, whether it's the Winklevoss exchange traded funds, some derivatives vehicles, some swaps, and all these are going to take a real hard look and a real need for good exchanges and products and services that allow businesses to be able to go to the next level, be able to hedge risks from a Bitcoin perspective. And I think that's really important. And then the final point is really, we still do have some level of uncertainty that is really kind of holding up the process. We talked about the New York proposal, but there's still this overall regulatory uncertainty that's not allowing banks to get involved here or to work with exchanges and other firms, not allowing audit firms to come in and work with companies. So I think, again, as the outset I said, we're really in a critical phase. I think once we get some of these things and some of the certainty in place, I think you're going to see a really different marketplace, especially from an exchange perspective, over the next 6 to 12 months. And the exchanges right now, we don't have too many. Most of them are still overseas. We need to get real exchanges in New York, in the U.S. And I think that's things that important work that Barry and folks like him are looking to do.
What I have found interesting for the past 9 months is the speed at which Bitcoin and digital currencies in general have kind of moved onto the radar screens of the banks and the institutional investors, and the reaction or the evolution of the perception. And I think I talked about it earlier on with the regulators. I mean, there's this natural kind of Bitcoin education process where you start off as being a skeptic, and then you're curious, and then it's about gaining knowledge, and then you become interested, and then for some of us, you get bit by the bug and you become a bit of an evangelist. And in really just the past 3-4 months, there's been a real dramatic increase in the number of meetings and meetups and dinners and breakfasts and lunches and events kind of within the Wall Street community as it relates to what the heck is Bitcoin and why do we care? And with the Bitcoin Investment Trust, the vehicle that we created for investing in Bitcoin, it is open to institutional investors and high worth investors. And we're not yet seeing the institutional money come into the vehicle, but what we are seeing are the principals of those funds and of the banks. And some of the largest, or some of the most well-known and successful investors have invested in Bitcoin in the Bitcoin Investment Trust, and I do think that is a sign that we will soon start seeing that institutional money move into space. But the issue, as John highlighted, is for a lot of the banks in particular and some of the hedge funds, they just simply they don't want to get involved in an asset class where, one, they can't take a large enough position, or two, that they can't get out of that position. And the exchange market today it's incredibly fragmented. There are no US-based regulated Bitcoin exchanges, one of the things that we're hoping to address. And we do think that, as these things come online, we will start seeing more money move in from Wall Street, but it's going to take some time.
Who do you think should regulate these exchanges? Just to follow up on the last comment.
Well, if you kind of look at the possibilities, you have the SEC, you have Fed, you have Treasury by way of FinCEN, you have the CFTC, all at the federal level. The comments made from each one of those groups kind of all point to potentially the CFTC being the most logical regulator. Especially given that I think Don was the one who mentioned there are a number of derivative exchanges that are being created right now. I think long term, though, ultimately it'll be the Fed because ultimately, this really is going to be about kind of payments and currency. But in the near term, I think it's unlikely it'll be the SEC. I think Treasury and FinCEN regulating this as an NSB is fine, except for you then have to deal with 50 state MSB type rules and regulations. And so having kind of a federal preemption hello? So I don't know if people can still hear me, so I'll keep talking.
Yeah, we can.
Okay, I don't know what happened, but so I think what you need is a federal regulator to preempt kind of the need for state by state regulation, and I think CFTC is the most logical choice at this stage.
Yeah, I agree with Barry. I think that all the agencies that he mentioned are looking at this. I would say that every group in DC has their own working group to look at these issues, but I think a lot of it is trying to fit this technology within the existing framework, and that becomes very difficult. We saw that with the IRS, and how do you classify Bitcoin? I think the SEC says it's more of a facts and circumstances analysis, and I think for the CFTC, it's really how do you classify this, and especially what are the products and services that we're dealing with. If we're looking at derivatives, then there's a little bit more of a hook there. I think there at some point there is probably going to be a need for some level of oversight for sure, just to offer that stability in the marketplace and give that kind of vote of confidence that is needed. But I think we are still a ways off, and so which is not a bad thing. I think taking that slow, deliberate approach and working through these issues is probably the most appropriate thing to do at this stage of the game.
So it looks like Felix is not on, so I'm going to play moderator for a second, unless Felix his audio is working. So I guess this is a question for Shaker. In the mid 1990s, Wall Street witnessed tech innovation with internet companies. Are we currently experiencing the same rise in innovation with Bitcoin products and services? And what impact is this going to have on the end user?
I think we're kind of in the early stages. There's a lot of really good things that came out of the tech boom. Mainly kind of where we are today as a result of what kind of happened during that period. I think we're seeing that growth and with Bitcoin as a specific currency, and I think overall the whole ecosystem of digital currencies is being looked at a lot closely, and opportunities are being explored, and obviously investments are being made. So I think we're kind of early stages. I think that the impact of it is going to be massive. Currently, if you are buying anything online and you're going through the notion of, look, I got to pay in one currency versus another, this kind of completely gets rid of that, right? The ability to just buy something from directly from China while you're in the US, or you're in Europe and you're buying something from US and you pay in one specific currency, it's massive. It does amazing things for trade. It opens up the market to a lot of folks that are locked out of products and services in the traditional financial services sector. It lowers the bar essentially to get into the banking world for a lot of folks that are on the outside. So I think we're just only seeing, a small set of business use cases or opportunities, and quite a bit of it is focused around trying to service some of the entities and some basic individuals. I think the number of wallets is around like 5 million. I mean, it's very, very, very small. By the time this grows in the next few years, we're going to see permutations of digital currencies that we haven't thought about now, and it's going to have long-lasting impact.
Does the panel think that, this actually is a question for Barry, but I'll open up for the entire panel as well. Are we ready for the next, big IPO? Are we ready for the first, actually, IPO in the Bitcoin space? Do you think that both the Wall Street and Main Street is ready for Bitcoin public companies? And if so, when do you think that's going to happen?
Well, if you're as excited about Bitcoin as I am, and I'm probably one of the more excited people out there, you believe that we're going to see a substantial amount of money move into Bitcoin as an investable asset class, and you think we're going to see an explosion in investor dollars into the companies that are building the products and services to make buying Bitcoin, holding Bitcoin, using Bitcoin, and all the other great applications easier and better for consumers. And as was mentioned earlier, Bitcoin as a VC asset or theme or investment theme, it's probably one of the hottest sectors right now. A couple $100 million that have been invested in fantastic companies like John's company Circle. And the issue is as an investor, it's just not accessible to the average either retail or institutional investor because we're still very, very early in the days of Bitcoin. And so, I always advise people, if you're excited about Bitcoin, you first have to buy Bitcoin because it really is a bet on the community. It's a bit of an index play. The entire thing's going to move up or down depending on Bitcoin awareness and adoption globally. And then after that, and by the way, you do that directly by buying Bitcoin, or you can invest in a vehicle like the Bitcoin Investment Trust. And then beyond that, it's about, do you want to make specific bets on companies? And if you have access to the angel type deals, if you have access to the VC firms active in the space, that's certainly a viable option. I do think we're probably at least 18 to 24 months away from some of the larger, more mature Bitcoin companies being at the stage where they can go public. So I do think that there will be limited investment options for the general public in the near term, but that will certainly change, just like kind of the internet, kind of circa 1995, 96, 97.
And this is Shaker. So go ahead, John.
Shaker. Oh, go ahead, Shaker.
And all I was going to say is this is much like Barry and team, and we're all kind of we're all working in the Bitcoin space and making sure that we build capabilities in that space, whether that happens to be compliance or the ability to build exchanges or wallets to essentially drive adoption, right? And for IPOs to take place, right now we're seeing investment dollars coming into the sector, and that's building a lot of capacity, or they're basically building as entities or organizations to service in the Bitcoin space. They in turn drive the adoption into the market, and the regulations are like an important component of that, right? You need that bit of structure and transparency, consumer protection, and basic AML rules that helps control the flow of assets across these networks. And as those mature and the adoption increases, then yes, definitely for opportunities for Bitcoin companies to go mainstream and going public and making available consumer investment. But I think Barry is correct in that in the short term, the way to invest in Bitcoin is to kind of just buy Bitcoin or partake in as a trust. But in the longer term, it's going to be really the ability to get the companies to drive adoption and to have enough structure around them so that you can protect consumers so that they can actually use the products and drive revenues for those companies before any IPO takes place.
Yeah, this is John. I agree with everything that's been said. I think again we are still a little premature. I'm as excited as Barry or anybody else about this space and the potential and the potential for to see real investment in IPOs down the road. But I think the utility of value of Bitcoin is still not really even understood. I think there has been a recent survey that still about 70% of Americans still don't even know what Bitcoin is. So we got a ways to go here. I think, and people who do have possess Bitcoin, again, a lot of people are just holding on to their Bitcoin. There's still not a lot of Bitcoin flowing through the payment rails. We still have a low number, an expanding number of merchants accepting Bitcoin, but I think we're going to see that really take off, especially in the near term when we start to see other processors like Square and Stripe really broaden out the ability to accept Bitcoin by small businesses. And I think, once we have, a couple of things, I think once we have both business maturity and also regulatory maturity, I think then you're going to see potentially some IPOs in the long term. I think the other thing that really strikes me here is, as Barry mentioned earlier, this is a global phenomenon. So, you're seeing startups and really good businesses, not only in the US, but abroad, and you're seeing a lot of things. We don't even know probably what's out there, the next best thing that's out there. I think we're seeing a lot of innovation and a lot of enthusiasm, something like that I've never really experienced before, having come from the world of banking. And so this is really a great marketplace. And I think but it is still early days, and I think we should start seeing something well, in terms of IPOs. That's still a little bit down the line.
John, this is actually a very good segue to my next question, which is about the institutional side of business. As the industry is setting its footprint, both in the marketplace and the regulatory side, a lot's dependent on the institutional players, institutional participants, and particularly the liquidity providers. Right. What is your thought? Is there an institutional market out there? What kind of liquidity is out there? I think earlier you said that there's still a lot of work to be done on the liquidity side. Can you comment on that?
Yeah. I think the institutional money is definitely there. The institutional investors are there. They're kind of, again, waiting in the wings and waiting on the sidelines. I think there's a lot of excitement. A lot of people see the potential here. And I think, but we still have very little liquidity in the marketplace. I think there's a number of issues that we've already touched upon that might need to be kind of settled before we get full-scale institutional investors really coming in and having some market makers in this space, which could really be a game changer and really change the dynamic of the marketplace. I guess on the regulatory side and what is needed or what may happen, we did touch upon this a little bit, from the SEC and the Cftc perspective. But I think, we can kind of look at what's already been done by those folks to maybe get clues of what we might see down the pike. The FCC, for example, has focused a little bit. You've seen a few things on the enforcement side. There was a couple of cases, one brought against a person in Texas for a Ponzi scheme involving investment in Bitcoin. We also had another charge against an angel investor in the space, which sold shares in a site or for Bitcoins without registering with the SEC. And that case was settled. So the SEC is obviously looking at this from an investor protection standpoint and enforcement standpoint, as they always do, and is their mission. And they've also issued alerts and warnings similar to what we've seen with the CFPB and other regulators. So, those are the areas that they're focused on, and that what might be part of their kind of regulatory framework going forward. The same thing holds true with the CFTC. Again, they haven't really taken much action, but they have said that they, do believe elements of this are subject to potential regulation, especially in the derivatives area. And so, we will again see how that plays out. And all those things will have an impact on the level of institutional investment here in the space. I think especially when you're talking about banks or investment banks post-financial crisis, there's still a bit of risk aversion, and there's they like to there's pressure on them from their primary regulators or existing regulatory authorities. So for them to really enter in this space, some of this needs to be settled going forward.
And this is very, in my opinion, I think that Bitcoin can fulfill the promise of completely disrupting the remittance space and the payment space and the whole kind of money rails network, unless we see some real significant investment dollars come in, and more importantly, the associated liquidity therewith. Because at $7-8 billion in kind of Bitcoin in circulation, it's not big enough to address kind of the remittance need in a way that's kind of scalable and less expensive than what the current providers charge. And payments as well, it's unlikely that an enormous online or brick and mortar merchant is going to accept Bitcoin if they have to take any type of risk in terms of the conversion into fiat. And even the kind of largest, most well-funded businesses like Circle and BitPay and Coinbase, they can kind of guarantee the exchange rate, I'm sure, up to a certain point. And so what we really need to see is the Wall Street money moving in. And if it does happen, it's going to have a really dramatic effect, not just on the price likely, but kind of liquidity as well. But then it's going to be that catalyst, it'll be that enabler, so that if the price of Bitcoin, the value of Bitcoin in circulation goes up 10x, and so we're talking about 70, 80, 90 billion dollars, and if the daily liquidity goes from the 50 million it is today, up to $500 billion, some pretty magical things are going to happen, I think.
And so from my perspective, the only thing I would add to that is that there are some telling signs from the New York's proposed bit license rules, is that there are exemptions around entities that already are licensed under the financial services agreement. So I think that kind of helps clear or at least ease the way for some of the institutionals to come into this space.
Yeah. I think
Shaker, which actually leads to the next
note
question.
on
I know this is something we discussed.
how little liquidity is in the marketplace right now is the clamoring over the government auction of Bitcoins from Silk Road. So
Shaker, let's talk about let's continue discussion about the institutional business. My question to you is something we discussed briefly during the prep call. What companies do we see coming into the side with the lending Bitcoin? We've seen them entering the space. How do you view the lending side of the cryptocurrency business? And again, the ultimate question: if we're going to see growth on the lending side of Bitcoin, is it going to be regulated to protect the consumers? What are your thoughts?
I think so. We ran a small. We looked at the Caribbean a few years ago in terms of the lending space, and so it's the lending space for the non-traditional bankers or banking consumers. So folks that are underbanked or unbanked completely is incredibly difficult. You're looking at rates of anywhere between 25 to 50 to sometimes above 50% interest fees because of just the unregulated nature of that sort of small cap lending. I think there's a tremendous opportunity for Bitcoin in the lending space, especially when you come to bear things like the social economies, like where you're leveraging companies like BTC Jam, which I'm a big fan of. They bring the actual lenders and the loan applicants together in a very interesting platform to help use Bitcoin and mainly to allay the FX rate risk, so that they can actually, provide lending solutions across different countries for the very smaller consumers that don't have access to regular financial services through traditional banking. I think as far as regulation for the lending space, we're going to have to start with what we know, right? We have to start with what we know around consumer protection and the basic laws that we have. But I think that the regulators have an opportunity to innovate here as well. And because we don't have the sort of entrenched perspectives from the sort of legacy players like the credit cards and companies and the banks, there's an opportunity to enhance the consumer protection capabilities so that it's built into the process, and there's additional transparency that currently doesn't exist, right? So I think from an opportunity, it's tremendous. I think there are companies like BTC Jam that are out there and they're operating and they're working really well in that space. I also think that there's a risk that kind of runs along with that around anti-money laundering and KYC that needs to be dealt with, which I think some of the proposed regs will address. But I think we'd start around regulation with what we know, and we modify from there, we innovate from there.
Thanks, Shaker. So we have a final question for the panel, and then I'm going to take questions from the audience. And let's go back to what we discussed during the first question, where a lot of the investment money and investment funds from venture capitalists is flowing. Where is it flowing to in the cryptocurrency world? And what is it going to look like in the next few years?
This is Barry. I'll kick it off. So here in the U.S., up until recently, most of the investment dollars were flowing into building the basic infrastructure that would support broad-based Bitcoin adoption. So what is basic infrastructure? That's consumer wallets, merchant processors, exchanges, and miners. And I would say here in the U.S., we're kind of pretty fairly represented with great companies, providing each one of those services. And so, here in the U.S. and to a lesser extent in the U.K. and Europe, the investor dollars are now starting to kind of flow to kind of the next kind of level of company, the companies that are building really interesting, unique products and services that rely upon the infrastructure that has been built. And so, BTC Jam is an example. I'm an investor in the company. It's a lending platform where it would not be possible for BTC Jam to exist if there were not exchanges, consumer wallets, and miners. That's here in the U.S. Outside the U.S., it's a whole different ballgame, and a lot of my investing is actually being focused right now on identifying who are going to be the winning merchant processors, wallets, and exchanges in the countries and regions where I think Bitcoin is going to be taking off next. It was just announced, I think it was yesterday, that I made an investment in a company called Unicoin in India, which is essentially looking to build the Coinbase of India. And I think what we're going to see is dominant players emerge in various countries and geographies, building that basic infrastructure, and their success is going to be based on first mover advantage, fantastic teams, and like here in the U.S., really strong relationships with banks and regulators. And then ultimately, I think we'll see some consolidation on a global scale, but I think over the next few years, we'll see a fairly fragmented investment landscape.
What, from our perspective, much like Barry, so we're seeing the money flowing into new capabilities. There's also one thing that seems to be a bit more poignant now is with some of the investors and VCs that we're talking to. There seems to be a significantly heightened awareness of allocating dollars for compliance purposes, knowing that this is going to have to eventually be is going to be subject to some degree of regulation, depending on the jurisdiction that the organization operates and the customer base it serves. We're seeing VCs allocate dollars for compliance, specifically for compliance. So that'd be the only addition I think I'd have to that in terms of where the monies are going.
Yeah, and I just very quickly say I think that's very well said and really explains what the framework is out there. But I also think it's interesting to me to see, the VC dollars, the amount of dollars, but also the players and significant players here who are kind of all in. Folks like Barry, folks like Mark Andreessen, and some more larger investors that are really putting significant dollars and spreading it around to all different parts of the ecosystem. Very encouraging, and I think there are players who are waiting on the sidelines, who are chomping at the bit to get in here. So I don't think the amount of investments is going to slow down anytime soon. I think we'll see a real ramp up.
Thank you, panelists. So moving over to the Q&A part, we have a question from one of the participants, and the question is, will Bitcoin-specific compliance tools be adopted?
Hello?
Would anybody like to comment on that?
Did we lose Felix?
Might have lost Felix.
No, I'm
I think
here.
we were about to take some questions from the audience.
We've got about 3 minutes, and so I guess maybe what we can do is, if anybody has any questions, they can post it on the chat, and we can pick it up.
I do see one question here about whether there's any specific Bitcoin compliance tools being adopted, and I guess I can answer that as a compliance officer for a Bitcoin firm. The answer is yes. There's a lot of investment and a lot of tools being adopted. It's similar to other industries, around systems, whether it's in the anti-money laundering space or from a security standpoint, which is one of the most important areas that we need to look at and make sure that our assets and private keys are secure. And so there are various industries really building up here and maturing, and there's a lot of good tools, and you're also seeing a lot of more good resources coming into this space, people with specific compliance backgrounds. A lot of these companies and folks that started it really had a tech background. Now you're starting to see more of the traditional kind of compliance folks bringing those skill sets into the space, and it's really encouraging and help develop the marketplace and also appease a lot of the concerns of the regulators here. So a lot of good developments in that area.
And I'd plug Strevis, and we'd be one of those organizations in there. And really, the tools we built for the traditional market, we've been able to bring in the policies, the business rules, the subject matter expertise around AML and compliance lifecycle management into the Bitcoin space. So, I think we're looking at making sure that we have full lifecycle support for the Bitcoin space going forward and extend it to the digital currencies.
Mm-hmm.
I hope everyone can hear me now. I apologize. I had some technical difficulties. We have another question. What is your point of view in regards to investing to the development of BTC protocol? It's open source, so how do we ensure the development is funded and on track?
This is a Shaker. So this is my own personal opinion here on this. I think the application of the blockchain is quite expansive, and so I look at it past the Bitcoin BTC protocol, and I look at the sort of blockchain. I think that there's starting to be quite a bit of interest in how it can be applied in other industries and other applications. And from that perspective, I do hear from some of the VCs we're in touch with that they're looking into that and they're exploring those opportunities. So I think it will happen probably more organically, but again, that's more of the sort of the higher view of the blockchain and not just the BTC protocol itself.
We'll take one more question, and then we'll wrap up this webinar. The last question is, what scenario could Bitcoin lose its first minor advantage, and how would that affect cryptocurrency interest on Wall Street?
This is Barry. I think that Bitcoin wins. But having said that, there are, last I looked, about 450 alternative digital currencies and platforms that have been launched. And if you measure success or adoption based on the value of the currency in circulation, Bitcoin is by far the leader right now. At about 7 billion. The next one down is probably Ripple, which is about 500 million. I think Stellar, based on limited trading, is around that. And the number 2 was Litecoin, but the price has really taken a tumble over the past few months. And so I think ultimately, I think Bitcoin wins for 2 main reasons. Reason number 1 is just kind of first mover brand awareness and kind of a high switching cost. You have, again, $7 billion of money tied up, whether it's institutional money or VC money, angel money, that we all are not just going to switch over to something else because it perhaps has some unique advantage to Bitcoin. And with money, I mean, there really is the kind of network effects taking hold right now. And so I think that's reason number 1 why Bitcoin wins. Reason number 2, and this is really more important, is Bitcoin. At the end of the day, it's software. It's code. It's a living, breathing platform that is constantly being updated, upgraded, and will adapt to whatever the market demands of it. So let's just say that there is some currency protocol that kind of takes off. There's nothing that would prevent the Bitcoin development team from incorporating that into the version of the Bitcoin client. And that has happened, and that will continue happening. And so I think these altcoins are a nice kind of testing lab for what will ultimately be tweaks to the Bitcoin protocol.
Of Payment Week's regulatory webinar series. On behalf of Payment Week, I sincerely appreciate Barry, John, and Shaker's participation, and thank you to all the participants who have attended this webinar. We look forward to. Yep. And I look forward to seeing you at other webinars. Thank you.
Thank you. Thanks, guys.
Thanks, everyone. Thank you.
Bye.
Bye now.